Everybody, welcome back to Getting Started with Think or Swim, a session I've been doing for a series of years now, but hadn't for a while. Cameron's been doing a great job on this, but Cameron is out today, so filling in for Mr. May today. So with that, folks, I wanted to discuss specifically, we find ourselves in the midst of earnings. I want to talk about the earnings calendar, specifically also an earnings function that we're going to be seeing in the Analyze tab, as well as some fundamentals too that I think are really quite useful as we dive on into that a little bit. So with that, welcome to each of you. Great to have you here today. And I'll just pull this up real quick and just welcome you all. Yeah, oh, we've got, let's see, Hill as well as JD and others, Rojo, Richard Scott, Life in the Fast Lane, Manuel Greg, Mohammed, and others. Any questions or comments, definitely throw those in the chat for you so we can address those for you. Joining the chat by a good friend and colleague of mine. I'm sure you've heard of him before. James Boyd, you'll see me in the chat as JB. So thanks for covering short notice on this, JB. And everybody, good to have you here. So let's do this. Let's set some disclosures so we can get on into this. I hope to enlighten you with some interesting tools as it does relate to both earnings as well as some of the additional fundamental tools here today. So with that, as it states here, Schwab does not recommend the use of technical analysis as a sole means of investment research. Options carry a high level of risk, not suitable for all investors. Paper Money software application is for educational purposes only and allows users to engage in simulated trading with hypothetical funds using live market data. Now, there is no guarantee that the execution of a stop order will be at or near the stop price. Investing involves risk, including the loss of principal for some products and strategies more than your initial investment. Lastly here, past performance is no guarantee of future results. Now, folks, as we look at our regular schedule here of lessons, and I know there is some variation of those lessons as we go through, but I really wanted to focus today right here on the Analyze tab, some of the great tools within the Analyze tab. And actually, I'll say this, with the Market Watch tab too. Within the Market Watch tab, yes, there is a calendar there. I'm not sure if you're using it the way that I've found it to be helpful to use. So hopefully I can shed some light on how I use that as well. We're going to link that directly in from the calendar into earnings down here, and then we'll dive into fundamentals too as we look at the Analyze tab. So some fun stuff in store today. Let's go ahead and pull up the Think or Swim platform right now and get going. So here is our Paper Money software application. Here is the Market Watch tab as it stands right now. Now, within that Market Watch tab, as I mentioned, we kind of have a little bit of a link to some of the fundamentals. You're going to get it right here, and we are in the midst of earnings season. Now, just a couple of quick notes on this, because there are some unique ways to show it descriptive where you might want it to sit exactly, getting what you want it to show on the screen. Over here on the left-hand side, yeah, I do have earnings selected. Of course, a lot of income-minded investors might be interested in dividends. Conference calls are very great to have as well. What are they saying after earnings? A lot of times, it's that post future guidance that actually ends up moving the stock up or down. What are they going to be doing in the future? Other events listed here as well, but earnings is really a key one. You can see right here today, we have so many earnings. We had so many yesterday, today, yesterday, and tomorrow. That is 49, 49, and 59 over here. We can't fit them all into the box, right? It gets a little bit tricky to do, but we're in the midst of earnings season, so not too surprising now. You can go back anytime too. We are on the 29th, and by going on the 29th, you can come over here and, it's highlighted already, so you're going to be getting all the information related to the 29th right here. Right? It's got some good information in here. Before markets posted up front, if you skip down below, just using the cursor, you're going to get after market as well right there. Okay. And you'll say, if you wanted to look like at tomorrow, we can't see what those symbols are, but we can click right here. Now you get an idea of what companies are going to be being presented tomorrow as we go through this as well. Okay, so that's kind of a key element just to be mindful of. Awesome way to be able to tap into all this information. You do have estimates over here as well. You got actual numbers too coming up. You see all the estimates coming in on the day? Well, we don't have these. These are after hours, right? Because we don't have the EPS actual, but these are always fascinating to just kind of verify. Like Like what beat earnings today? Well, this company did, BG, right there, right? I'm sorry. Yeah, they did. Yes, they came in at 90, estimated was 96 cents. They came in at a dollar 83. And this is normally I mean, you're going to see this number, by the way, whatever this number is right there under estimated, folks, that's exactly where you're going to get this on the chart. Here's BG right there. You see it right there. So if you click on that earnings, that's all your information. It's just a very slick way to get all of it very, very quickly as opposed to on the charts, but you can tap into it right there pretty quickly as well. All right, like I mentioned over here too, this is the click here, and that's where you can jump in. I'm not going to click on it, but you can get that press release. Now, if I selected the conference call, you could actually have access to conference calls in there too as well, which are very, very useful. Watch this. If I just do conference calls, and let's just go to uh, yesterday or today, click here. You can listen to the conference call through the Thinkorswim platform. Isn't that cool? So I've done this, and you guys know, well, some of you know, I do go biking. In fact, JB knows I go biking, and I go biking pretty frequently. In fact, I had a great bike ride with JB up in Park City. He took me to a cool place up there. It was awesome. I'll remember that one for a while. But great way to do it. If you're out doing something, if you listen to things in the car, you can listen to this. That's a great way just to take advantage of the time. To listen to something if you're not able to do other things too. Or you could do a couple of different things simultaneously. All right, up here, you'll recognize a lot of these companies, and that's by design. And that's by design because up here, I have selected the S&P 500. Now, I could choose an individual company. For example, REGN. Watch this. If I just go REGN, boom, you just got one there today. If I wanted to find out, does this company have earnings, and I want to do it very quickly over a broad base, I could do it right there. Where I was though, to see the S&P 500, just click on that wheel. On the gear, you come down here, and you guys are so familiar with this, but all I was doing is looking at the S&P 500 down. Of course, many of you don't like the S&P 500. I'm kidding. But you might want to take a look at the NASDAQ 100. Oh, they all fit in the NASDAQ 100 here. So if you were just looking at that, kind of more the tech heavy, you could see them a little bit easier. In fact, you're not going to see anything on this as you go into the calendar. You're not going to have anything that I've run into where it's fully covered up on the day, where you're just looking at numbers. But let's go back to the S&P 500, where it does just show the numbers because we have so many. But if you want to look at just what's in there, NASDAQ 100, if you want to look at that group. Now, the other thing is some of you up here might just be looking at this. I don't like this view as much. Now, you guys might. You guys tell me, do you like this view? I'm not a huge, huge fan of it because I'm just looking at on the week and I have to kind of scroll down and see a few things. And I don't, it just doesn't work as well for me. I'm not seeing as much information. So what I want to do is just go right over here. This is the trick. Click on monthly. And that way you get to see the month, you get to see what happened in the past and other things, and then you go. There you got it. And it lists this all up and ready to go here. Now the question is I am in the month of March. So you can go back, but if you ever run into that issue, yeah, here we are in April. So that looks a lot more familiar. But there you have it. Okay. I don't know. Do you guys like that view? I found it just gives more information. I can see, okay, what other companies, like for example, oftentimes this kicks off earnings, or where does earnings kick off at? Right there. In a lot of cases, investors will look at that. Goldman was on Sunday, but the major banks are right in that range. And so just be mindful of that. And then all of a sudden, a lot of other companies you recognize too. All right. Let me just take a look at chats and see how we're doing. Okay, I think we're all got up. Somebody said not real. Okay, not really. All right. Hey, you have some varieties though. Click on whatever you want. Put it that way. Okay, let's go from calendar and let's go now into analyze tab and let's pick up on those earnings. Let's do a little bit of a deeper dive into earnings that we just saw. All those companies are reporting earnings. Now we can take a look at those earnings and see how they could compare to other numbers here as well. So I don't have this linked. I'm going to go ahead and link it right now. We were just looking at REGN. Now that was part of our group here, but you can see a couple of different pieces of information here that are coming in. The main thing that I like to look at, a great area, because as you guys know, you will see different changes occur around earnings specifically, right? How has the stock been moving maybe a few days before earnings and after? You can see this. This is really interesting too, because you can kind of see where there are gaps. That was clearly a gap. That was clearly a gap to the downside. We're not seeing like a ton of information in terms of like consistency. It's kind of all over the place, but sometimes you can come back here and sort of look and just see what companies may have. I'm just going to throw one out here. Like, for example, let's just do, um, we want to see what Network Appliance has been doing, kind of post earnings. And you might sometimes be able to see a shift here. Like, for example, this was a gap down. So was this. Maybe some history of gap downs, but then post earnings, it kind of been up, and maybe down slightly, but up again. So that's kind of been the performance. Now, this is really interesting too. Have they been beating earnings or missing earnings or meeting earnings, whatever the case is? You can come over here and say, well, what were the actual earnings over that time frame? Totally helpful. In other words, has the company has a history of beating earnings expectations or missing earnings expectations? That would be something to look at. I've got one to take a look at here. I'm kind of curious about myself that I saw an AI stock yesterday. It kind of had a rough earnings announcement, but you can see that it's had a history of beating earnings. And by the way, you're seeing some other things here too. I mean, obviously, gold line above Wall Street estimates, but what is the trajectory of earnings as well? You get to see it here historically. We've got 2 years worth of data. That's 8 quarters you're looking at here. But is it generally, and that's the key word, generally, is it generally going higher here? Nice to know. Sometimes earnings can be quite supportive of the underlying trend of the stock behind the scenes. You're seeing this in a line format. Now, I created something like this, and we can do something like this tomorrow too in ThinkScript. If you guys are interested, let me know in the chat. If you are interested, let me know because we can put like an earnings line on the chart so that you can track. Okay, let me just draw this. So let's clear this off. So on one side, you're seeing this is earnings and gold, but let's just say, how is earnings doing relative to the stock? What is the stock doing? Is the stock undervalued? And by the way, I'm going to throw something out here that many of you already do recognize this terminology. Talk about the swing trade class and others, but here's the thing. Is the stock getting or is there a positive divergence being created on the stock? A positive earnings divergence. In other words, earnings is shooting higher, but yet the share price is kind of maybe still consolidating. I'm just going to highlight this. What do we have on earnings? That's a new high over this range, and I can tell really easily because if I go over here, that's a new high on earnings. There you go. That's a new high on earnings. Now, let's do this though. Let's look at the stock relative to earnings for NetApp specifically and just see what we got. Okay. Are you seeing a new high on earnings? I'm not. I mean, this is only a 1 year. If I went to a 2 year, I would say this: prices are down. Stock price is down. I mean, down, but earnings were, what were earnings doing? Let's flip it again. Earnings were doing something like this. They were higher. Now you are also seeing over here a bit of a bull flag image too, coming down and kind of resting on prior highs. Now this can be one of those areas that traders, investors are very interested in. Maybe both, because on the trader aspect, this is an example here, but on the trader aspect here, you got a bull flag. On an investor aspect, you've got earnings that are making highs over here. Now, how did we get that? This is a tool that you can frequently use. Just a couple tabs over, there it is. Earnings have been improving. Okay, cool. So Mark, Riceberg, Richard, JD, possibly. We'll definitely do it. Well, yeah, we'll do it, you guys. We'll do it in ThinkScript tomorrow. I think it can be helpful. It's one of those cool tools. We're gonna do a lot of ThinkScript trading tomorrow. there are some interesting trades on some of the scripts we've created, but we'll definitely throw that in. Okay. By the way, there is a survey link in the chat, folks. If you're able to fill that out, there's only a couple questions. There's a comment section as well, and I can pass those topic requests on to Cam. In fact, Cam will be on a sabbatical, and I'll be filling in for a couple of weeks on getting started with Thinkorswim. So I'm looking forward to that very much, so I can share with you guys my tools, get you caught up to speed on what, some of the stuff I think other traders use as well. I certainly like to use them. But yeah, if you get a chance to fill that out, that would be great. By the way, yeah, let's do this. Let's continue on. I'll put a note down though to hit that so we can get that on there. That's just a great little fundamental technical sort of a graph to have. But you guys, okay, I want to check out one more. ASGN. Okay, so ASGN, whoa, we don't even have the stock price up here. ASGN, how did Wall Street estimates do by contrast? Well, they were holding up pretty good, but you have to say lower lows and lower highs on earnings. Lower lows, lower highs. Now, I know that James loves tops and he loves the top, the topping patterns. I mean, he loves it, but he might not like this as much because, I mean, a lot of times he is looking for momentum. A lot of stuff he does discuss, right? He might look for bottoms every once in a while as well. I'm more of a bottom guy myself, but I will say this, I like to see some consolidation, maybe growth at a reasonable price, a lot of those scenarios, but this one, earnings, folks, clearly earnings has been doing what? Earnings, well, they've been going down. Well, let's just see. Did this give us any insight with lower lows and lower high on earnings that we might have been a little bit cautious about on the stock? I'm going to link this so that now when I go to my, oh, dang, watch this. ASGN is linked. So now when I go to my charts, it'll be there. There it is. Okay, a little bit of a dip. Ooh, what happened? Is it even trading today? What on earth? Uh-oh, something happened here. I'm not getting data or something going on. Anyways, that dipped, and I don't know. I don't think the stock just disappeared. But anyways, the earnings weren't so great, but earnings were in line with the trend. So you could say, gosh, that's a little bit risky, But I'm just saying, these are cool tools that can be utilized, when we're trading. Now, what would this be? Like I just mentioned, this is kind of a lower lows and lower highs. This is not like a bottom type pattern I was referring to before, like those rounded type bottoms that might have, cup and handles or anything. This is just simply sort of a falling knife right here. A little bit risky. Wanted to see it anyways. And there you go. Okay, yeah, that's big. Oh, EFOR. Thank you, Mark. There we go. EFOR. So it did bounce up a little bit, but this is about 22. You can see the big sell-off day. ASGN came down from, yeah, so I guess you're about right here. Thank you for that. But there you have it, EFOR. Okay. So some really cool tools that are fast. Yep, exactly. Name change there. Yep, as we go through this. Oh, the volatility graphs that are listed on here too. Yes, I can. Let's get a stock over here. Yep, I can see why they've taken that off now. Let's look at NEE on this one, and let's just show you as an example here. So there is implied volatility. There are some graphs on here, if that's what you were referring to there, Mohammed. But yeah, and looking at these, so some interesting information in here too that to kind of pick up on. So color coded, implied, and in red, historical in yellow. Now, implied volatility, that's what we're normally going to see. Like if we look, we're using some of the other option data. I know I read through that option disclosure earlier, but just generally speaking, we're talking about, a lot of times traders will reference this with options themselves. Why this is helpful and useful. Let me do this. I'll back out of this guy real quick and I'll show you something here. So if I was looking at NEE, uh, this is one of those paper trades we've got on right now. That's okay though. That's what just those limit orders are. Just an example trade we did previously. All right, is all we're talking about. Now, if I want to come down here, I'm going to take this on this off. But a lot of times traders will want to get an idea what the implied volatility looks like, where it's at relative to where it's been, and are there any significant changes around it. In fact, I'm going to do something like this. Let's go Amazon. And you're going to see over here, like I said, it can be utilized in options, a number of different ways to do it. We're not going to do that in this class today, but we'll highlight it. Look at implied volatility. This can give us some idea of where implied volatility can peak at, which can change option values, right? Based on some of those option Greeks. Now, coming over here, and you can see post earnings. Oh, what did we do about a month ahead of earnings? Well, you can see there was kind of a clear path higher. So, in anticipation of more volatility, post earnings, what happened? Well, it dropped off substantially, and it tends to do what? Bottom near this lower range. So it gives you a reference point. Of course, this is a 1 year chart. You could go back further if you wanted to see it, but still very helpful. How are we doing around earnings here? So earnings coming up. Well, we got roughly to, I'll clear some lines off, but right over here, what was this level? Okay, right there. We're right about where we were in November, maybe close to where we were over here too in May. But there has been a tendency post earnings to dip lower, lower, lower here. Even though this is a significant high, we still dipped quite a bit lower. But that would be something like a 15, I guess, point, 1.5 dip in implied volatility if we're in that range, 0.45 to zero point 0.3. And so it just gives you a sense that that's going down. But again, this can increase the cost of options and then, of course, reduce them. Some traders will use those around different option strategies, as they come up. So with that, let's go ahead and go back to this screen and we can take a look at implied volatility in this regard. It just gives us a cool reference point to say, hey, what was it? Okay, 1, 2, 3, 4. Okay, so 5 days before there's earnings and 5 days after earnings. Okay, so you got 11 days in total as you're looking at up here. We're looking at a daily chart, but it just gives you a sense of what was implied volatility doing. And the great thing is you get to go back that far. And I just showed you on a chart long term, but what this does for us is it lets us know right in that -5 day window, post 5 day window, right? Oh, post 5 days window, what's going on around implied volatility. And the great thing is once you click on it, it will give you those levels. So you get to see where they are. Here we were. So this was up quite high. This was really a higher one. But a 2 year perspective, you get to see this and you can kind of go across and just see how that's unfolding. You do get historical volatility. A lot of traders will use the implied, but this will give you a bit of both over each one. Now, that was a fascinating one. Implied volatility shot up post. My guess is it probably dipped after, but there you go. I do like it. I think it's a cool reference, but I do like this. I like it on the charts myself. I like to plot it out and just see because with this, I get to see what happened after. Were there any price patterns? What was the trend? And I get a quick correlation just above with the chart. So, interesting question. And there you go. All right, now we're going to do a little bit deeper dive into earnings, and we'll go here. Let's dive on into it. So we're back into the Analyze tab. Not earnings, yes, but also into fundamental data right here too. So I don't know about you guys, but I use this quite a bit. First off, you can go in here and see where it's at. You can click on it and get that consumer discretionary information. It's listed right here. What segment are we in? What sector specifically? If you want to know what sector the company's in. Of course, descriptions down below. You got the website. It'll tell you about the filing information, explains a lot. This is really, really, really helpful. In fact, I just did this on a company, NEE. This is all about electricity, and this company is, and they generate that in the U.S., which is kind of in high demand with AI, et cetera. One of the companies we'd looked at last week in terms of swing trading, and one that had just broken above a range. But I mean, that was helpful to see, maybe why it's breaking above a range, what's happening with the company. So kind of a macro perspective and linking that together with obviously the sector over here. Now you get your, we've got these all over the site. I've never used this, I don't ever just look over here in fundamentals and just, buy, sell. I mean, but hey, it's there. If you're looking at it, this is really useful too. Of course, on schwab.com, you could look and find this type of information. But over here, we've got analysts and we've got the analyst ratings. That happens to be, as we're looking at it, CFR rated a 5-star. You want to find out why? Just click on download and pull it up and take a look at it, okay? And some others in there. Morningstar has it at a 3. Uh, so you can take a look at that too. By the way, with Schwab, you can scan for, like, for example, 5 stars and 3 stars and things along those lines. Whatever you look at. Well, you probably wouldn't scan for 3 stars, but 5 or 1 star, whatever the case might be, or 4 stars. All right. So some cool information there. Let's scroll on down though, because by the numbers here is really a great area to look. And I've got to explain some key things here as we look at by the numbers, because you want to be aware of this. This is different from Schwab.com, where we have something very, very similar to this. If you look over here, you can say, for example, right now we're looking at annuals. Now the quarterlies don't line up as well. They're not great. I mean, let's just show you, like right here. They don't fill in like all the information, right? You're getting earnings per share. Sure, you're getting that, which is great, but it's a little bit spotty up here in terms of book value, cash flow per share. We're not getting that just yet, but you are getting it in terms of year-end numbers. That's reported whenever their fiscal year end was, which is nice. Let's go back to the annual here for just a second, but you can get what, 5 quarters worth of data here? Yeah, going back. All right. So this is generally the way I kind of like to look at data from left to right, 2021 to 2025. Schwab is just the exact opposite. It's, different. And so when that's different, you have to be mindful that the 5-year trend is also, it's compared with these columns. All right. And then that correlates to the bars on the graph. So just be mindful of that. This is the one I'm kind of useful to, but I'd say there are even a number of sites online that I've seen that are like the opposite of this or like this. So it just kind of varies. But anyways, from a big picture perspective, really cool to be able to do this and just say, what is that trend? I'm going to show you tomorrow on a ThinkScript. I'll have it ready to go where we can plot out earnings relative to price, what's been going on with prices. You can have it on the chart, but this is another way to gather it quickly, just to say, is it going up or not? The chart one is a little bit more specific, a little bit more exact, but this is also pretty cool too. But that's the nice thing about all these. You got it all the way down here, basically everything. So what do we have over here? Like, how's it been holding up? Let me give you an example of one way that sometimes fundamentalists will use some of these big numbers. Like here we are down in profitability. This is return on equity. Okay. So comparing net income to a company's equity, or what it owns effectively. And a lot of times what traders will look for is just consistency. Now, this is where, I mean, investors too. I mean, clearly probably investors more than traders, but traders might as well. But you're just looking a lot of times for consistency over a period of time. That really wasn't consistency, but it was only like one quarter. Don't know what was happening there with Amazon. Excuse me, 1 year, 2022. That was kind of a rough year for the market as well. But if you come over here too, how is it doing in terms of holding up? Is it consistent or not? Just a great reference, because a lot of longer term investors, intermediate term, and I kind of look at both of those, as well. Um, how is it doing? Is it stable? Is it consistent? Or is it improving over a period of time? That's what a lot of traders look at. Let's pull up Apple right here and see how that's been doing. So Apple, really, really substantial numbers on return on equity. Okay. Net income, how is net income doing relative to what the company owns. It's basically, what it owns, in other words. And you could say it's not only strong, but it's been holding up quite strong as well. Now, all else equal, that's a positive. Where it does get kind of negative, and maybe let's see if ASGN, not to just keep picking on this guy. No, they pulled it out. ROFL. Is that no, 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 I'm sorry. What was it? It was I'll just pull that out. I'm just curious if it shows up now. Let's see. EFOR. EFOR. I was off a little bit. Okay, let's look over here and see. Okay, so this is what I was talking about. Another excellent reference. Intermediate term, longer term, return on equity. What does it show us? Hey, it was okay over here. Now, just as a quick note, Warren Buffett historically has said with ROE, just so you know, he says, I'm looking at 15% or more. 15 or I just say 15 or better. I've seen him to go as low as 12 on some of his investments when he was around. But that was getting close to that level. And what do you see though here? You know what I'm kind of getting from here on is this. See it down, down, down. Now, I don't have to draw a line to show you that, but look over here with me. Net income relative to what a company actually owns, like if you're looking at the business itself as the company itself is like a business, which it is, it's going down. Its ownership relative to the net income. I mean, basically equity relative to net income is really dipping. That's a negative. Okay, I won't pick on it anymore, but there you go. And let's do, yeah, it was more like an ROF. Where did I see that? I saw it on the corner of my screen. I'm thinking, okay, that was it, but I was off. Okay. There you go, though. Let's go back to Apple. That's not an ROFL, okay? Yeah. So that's more of a steady. Now, look over here too with me. What are we saying? Other areas, but that's kind of like a steady range. These bars aren't like great all the time. They can be helpful because on these big numbers, it's hard to kind of project exactly what's going on. But look over here with me. Look at GPM, gross profit margin. So what's a gross profit margin? That's sales that are left over after direct costs to the company to generate the revenue in the first place. How's it doing? Wow. I mean, it's holding up pretty well. And that can also help to build what? Earnings. Because remember, we're moving down to the bottom line on earnings. Some great info here. I don't know. I really get into this because I think there's just so many details here. Let's scroll on down. Of course, you get share values, profitability, we get activity ratios and financial ratios too. So financial ratios, long-term debt to capital. What does this look like? What is the total debt, or I should say the total long-term debt relative to capital? What does the company owe versus own? And you can see like a lot of traders, I'm just going to throw out a general thing, a lot of investors, I'll just say, some of them will use a benchmark and they'll say if it's greater than 70 or 80, it's just too much debt. Some would say that this might fall right in range for like a growth type stock that's also got some decent levels of capital. But there you go. But it's a cool way to check that even right here. Let's go over here and look at some other cool features. So what about this? The quick ratio, the current ratio. Liquid assets relative to liquid liabilities or what's due, assets that are liquid and what that are convertible into, you could say cash within 1 year relative to liabilities that are going to be due within 1 year. Generally on stronger companies, you're looking at levels over here that, Warren Buffett had said, and I'm just giving you a reference point, but he'll say 2 to 1. I want twice as many liquid assets as I have liabilities due within a year, something like that. But on some of these more established companies, they maybe some investors might have leeway. I want to throw out a few numbers here to you, just instead of just throwing them out because there's a lot here to look at. But those are some interesting reference points that some traders will use. Some investors down here, You got valuation metrics, which are also great. Price to earnings ratio. How's that doing? Well, here's your current ratio relative to the 5 year. So it's showing we're a little bit more expensive right now. The pricing of Apple based on earnings relative to the last 5 years. That holds true for cash to price to cash flow as well. Over here, you've got growth rates. How are those looking? Well, the current number for revenue is at 10. The 3 year is at about 4.34, and this one is about, 8 on a 5 year. So we're doing what? We're doing pretty well. We're above those numbers. So growth, you have to say over here, wow, that's a positive, right? That's a positive. All right. Others down here, some additional information. Let's do this here too. I'm just going to show you something like a Coke because I wanted to show you the dividend yield. The dividend yield. I don't have a 5 year on here, unfortunately. But there is a way to show that on the chart as well, what the dividend yield has been. So that's something we can look at too for tomorrow for the ThinkScript class too, just as a side note. Come over here, you can see valuation highlights, some additional information. If you scroll down to the very bottom, it does tell you what drives the company's stock. Why I find this interesting is I actually did speak to one of the executives of the company because I was actually trying to find out what was going on with this, and the guy told me that this is these numbers here are uh, cash flow, and he even said it was free cash flow. What percentage makes up the business itself, So over here you just say, well, with Coke, we know what it is. We know the product. We know the product line, beverages, and Coca-Cola, obviously, but it just breaks it down. Where do the free cash flows coming from for the business? Well, the majority are North America, Latin America, the Americas clearly, and then you got other areas too. Now that could be useful depending upon the type of stock that you're looking at. What if we did something like this? Disney. It's different. It's going to give us different information. Look over here. It breaks it down into the categories in terms of their products or services, really. Well, I guess, mostly services here, but products mixed into that. But then you've got like experiences. I think that's going to be things along the lines of, say, for example, let me just highlight this here. If I click on it, uh, like, let's see, this is going to be like Disney World and Disneyland and stuff like that. Experiences? Entertainment? I'm not exactly sure how that fits in, but description. Oh, there we go. Go over here to description off to the right is where you'd find that at, okay? Over to the right there, and you'll see it listed, and you can go ahead and specifically look at, okay, that's the motion pictures, etc. Were we right over here though, under experiences? Theme parks. There you go. So what's driving that business? Where specifically are the free cash flows coming from? Unless they change that from the time that I spoke to them, but that's what it was set at. And it's really quite cool. You can actually do your own forecasting over here if you wanted to. That could be tricky though, for sure, but it does give you that capability, that capacity. All right, everybody. Yeah, I'll take a look at those other charts. I just wanted to highlight that for you. We brought that up today. We'll have that chart data in the ThinkScript class tomorrow to kind of tie into this class a little bit and some others too that I'll talk about as well. By the way, definitely subscribe to our channel if you're not subscribed already. Got 191,000 subscribers. And be sure to check out JB's classes. I'm sure many of you already do. But he's got this investing master series, does a great job there. I do chat for him on some of these, trading the trend as well as some others there to take a look at. For that class though tomorrow, if you are in fact interested, I'll go ahead and just post this link into the chat. This is the one we did last week, a particular scan, but tomorrow we'll definitely tie it into here and do some ThinkScript trading as well. So there is the link there. All right, everybody. Good to be with you today, and hope you got something out of it. It was a lot of fun. It's really interesting to tap into, the calendar and then tie it into earnings, and then with earnings tied into fundamentals. There's just a lot of great data you got at your fingertips. And I don't know if you guys remember this, but it was about 6 months ago, Thinkorswim came out with a release, and they basically just stated They revamped a lot of that data for fundamentals. They had improved that data, and I noticed it substantially in a lot of other areas. It was just more consistent, and they just filled in a lot more of it. So that's helpful as well for what we've got. But with that, everybody have a great rest of the day, and look forward to it next time. See ya.